What's going on, everybody? DonLog, Infinite Money Trading. Just wanted to finally introduce myself. My real name is Logan. You can still call me DonLog if you want, but I'll just introduce myself as that from now on. Here in my office, my apartment, Midtown. Got to know a lot of you in the Discord, so I just thought maybe it's finally time, introduce myself, get to know you guys a little bit better. Been having a lot of fun, really enjoying it. Enjoy you guys' support, really thankful for that. Again, this is my job, so kind of stuck with it, so might as well kind of appreciate it with some other people, having some fun. Today's video, we're going to go over what happened in the market today, why I was able to actually pull off some pretty nice profits, and we're going to jump into it. All right, now that we got the IRL video out of the way, all those let's take a look at what happened in the market today, starting with a SPY chart. It's going to be cheesy to say, but really beautiful price action today. Not much movement, but the fact is that there was opportunities everywhere. And so, again, we had this entire rally from tech entering all-time highs. There's really no one knows when it's going to get too overbought. They can just continue to be overbought. And so until it reverses, it's going to continue to go up. And so that's why we saw such a large rally. And then, of course, yesterday, we had one of many of the sellings that have happened in tech because the velocity up and down has been so wide. But we saw a larger selling yesterday. And again, it's only really the top 5 of tech. The rest of the market is sort of reacting to it. But still, what I liked about yesterday is that as the top 5 lags a little bit, the rest of the market that's really trading off of anything that's economy related, even though the economy is not the best, the rest of, even if you look at the Dow it looks very healthy. And so this shift from the top 5 tech leading everything and taking us down has sort of, ended a little bit. It's really looking a lot healthier. And so to me, that makes the market look more bullish, even though we're down here. And so about another 0.5% today, but a bullish loss here today. If you take a look at where we opened, we would have needed to have opened below the support here. So there's an entire zone of support, and we opened up here. We would have needed to open lower for the real selling to happen, and we didn't. So that was already bullish in my eyes. I thought we actually could have gone higher and actually tested this resistance here. But again, tech is lagging, and so it's going to need to get some buying. You did see the institutions buying in. Let's just take a look at what happened during the day. And so here we are at open. Remember, yesterday we fizzled off. We sat right on the supply and weren't able to break back above. After hours did attempt to settle up here, but pre-market opened us down here. Asian markets were down, Europe markets were down, but they're just trading off of what's going to happen in our market anyway. So, what do they know? And so we opened here. This was bullish. We're above. We're going to bounce. We bounced. Now, we tested to come up here. This is pretty good. There's the few theories. We could test up here and get a bounce and get a lot of velocity down, or we get this nice, rounding off here, and we came down and tested support. You get this beautiful double bar here. And so what happened is you had a lot of opportunities. You should have bought here. Once this started rolling over, that's your sell point. And when you came back down here again, is the market crashing? No. And so you buy. Take a look. It happened over and over, and we're only taking a look at the 15-minute. If you take a look even deeper in here, there's more. But what's great about this is that we're just looking at the market view right now, and a lot of this is being determined by tech again. And so tech went through shifts today where it looked like, we might be getting some buy-in from the institutions. New York traders were chomping at the bit in the morning. And then again, when they get off lunch break, and then the institutions did it again at the end of the day. And so who's buying here? It's the big boys are buying. Everyone else is selling because everyone overreacts. And so who's the one winning again here? It's the people that know how to trade. It's the people that keep a cool head and keep confident. And so just taking a look at this chart here, this looks very bullish. Now, if you look at tech does look like it was overbought. And so it is doing some selling. And is it going to go lower? It's entirely possible. And even if it went a couple percent lower on Monday, I still actually think that you're going to see the SPY up, and especially the Dow. And so even if the NASDAQ again goes down, that's completely fine. That is a healthy transition out of tech. And so then when we see tech up, tech is going to come back up anyways. That's perfect, and I like that. And so now what we're going to do is take a look at the tickers that really performed well. And a lot of those are the positions that I was already set up in, had calls, and I also got a lot of swinging opportunities through the day to get some extra money out of that, out of really what this you see in this chart here, basing it off of what's going to happen in the market, and that exacerbates in the actual ticker's price itself, usually in a volume-centric way. So let's jump into those other tickers. All right, so each of these next plays revolves around what I just said about the market. Opened on support, didn't gap down, seemed very bullish, seemed like New York was going to take advantage, start buying it up. And so each of these tickers, I took that in mind, knew that the volume was going to be there in the morning, and then, of course, knowing New York traders going on lunch about 11 to 12 is when this volume starts really coming down. And so with that in mind, what am I going to do? I'm going to buy it open on everything that is at a support and that I know has movement and has velocity that I can take advantage of, and especially with volume on contracts. And so we're going to start with ON here. This is from the 7-8 watch list. I've been swinging this back and forth. I've got some big velocity breakouts already, but now I've been just swinging. Let's take a look. Support's down here, so we get a nice gap down. So there's a lot of percentage here, and so this is even better because now I'm opening down here further instead of up here and actually closing this gap a little bit. So we actually gap down. That offers a ton of percentage here. So again, what am I doing? I'm buying it open and I'm selling at lunch because everyone's going to eat their fast food or take a nap or something. So here's the play. Here's noontime. Now, most of these I'm selling at 11 to 11:30 because, you know, I'm not a savant. I can't figure out exactly when it's going to happen, but I know when the volume is going to start ticking down. And what else do I know? Well, I know that about 2 o'clock, volume's going to start picking back up. And so which way is it going to go? Well, I have to figure out which way it's going to go. And so based on here, there was no re-entry, but I bought here and sold up here in this area. Next up, take a look at Roku, which is also from the 7-8 watch list. And then, of course, we added it again with the pennant. Here's the pennant, the recent. What's going on here? Well, we're at an entire level of supply here, and it's been known that this is extremely bullish. And so what's happening? Well, we've been just sitting on it. And what happens in the morning? Well, the market's down a few percent, or excuse me, the market's down, you know, a percent from yesterday. And so then we lost about a half again. So here we are, market's down. Again, this is a large amount. Let's just take a look from here is close and here's open. So that's over 2%. And look how far we came down, over 3% at the lowest wick here. And so what is this? This is opportunity. Why would we not buy here? This is an entire zone of support. Is it going to break through? Are there no buyers? No, you buy. And when am I selling? Well, I'm selling over here at lunch. That's when the volume stops, right? Okay, and then the volume comes back up. Which way is the market going? It's going this way. Here's your opportunity to buy and sell. If it continues going, you hold. Now, obviously, I have long positions through here, but what am I trying to do? Well, I'm trying to average down a little bit. I'm trying to get some free money here today based off of what I know. So even though I'm not usually an intraday trader, I'm going to take the money when it's offered to me. Next up, from the 714 watch list, EW. Now, here's the opposite case. What happens at open? Well, take a look at this wick here. Now, this is a 15-minute candle. Here's open. Here's where it closed. But look at the size of this wick. Wick to wick, 4.5%. Okay. Well, that's pretty interesting. What happens? Well, we come down. It's lunch. And then nothing. Okay. Well, now it's 2 o'clock. What can we do? Well, which way is the market going? Here's your buying opportunity and a selling opportunity. Now, this doesn't look like much movement in here, but the volatility that is produced by this candle here is extremely healthy for contracts. And so prices increase radically. And I talk about all the time, I trade volatility. And so if you take a look at the contracts in this time, this scalp here is very profitable just because of the volatility that's involved. So I know it's not the easiest representation, but I just want to show you how even this play here is profitable because of the extra volatility. And so what happened during this time here? Well, volatility started going down because an understood pattern was developing in the market where, okay, now we're gravitating back down to support, and that's lowering volatility when we get an understanding of what's happening. And so this is an interesting one because of the volatility here. And so that's what I want to address, is that premiums skyrocket on volatility, even if price is going down. And so next up, we're going to just take a look at Z. I'm going to jump ahead a little bit. I'm going to take a look at Z. And so again, this is the ticker that I'm extremely bullish on. Again, huge price target. We're at 65. And so what happens here at Z? Okay, well, here's open. Now, again, what's the strategy? I'm buying at open on everything that I'm looking to swing, thing with good volatility, again, and looking for just a swing or really a scalp opportunity to buy it open and sell at lunch. So here's a great example. Here's 11 o'clock lunch, sold right over here. And so what also is happening here is that all my other long calls that I have on Z, they're increasing in value even when this is coming down. So this whole, whatever you want to call it, selling here has increased the value from not only this price action here, but from the market. And so the market, the volatility, if you look at the VIX, all of that volatility is increasing premiums across the board. So what happens here? Well, the premiums open lower, haven't adjusted to the volatility yet. I buy in and I sell at lunch for this entire amount here. It's a huge swing. Huge scalp. And I know a lot of other of you got in that. If you didn't do it, unless you did it on Roku, but this is really the dream one here, because it does exactly what you expect it to if you understand what's happening in the market. And so this is a huge play. And not only does it solidify my positions and average down and take care of any costs, it's a lot of fun. This is a really fun play here. So that's an interesting one. Let's start getting into some of the shit shows. Whoops. UAL. So again, this is from my 715 watch list. And so what have we been doing on UAL? Well, we've had some really interesting swings going on here. So if we just take a look at yesterday's swing, this was madness. And so all you could do was really buy in someone here. I bought in here at right after lunch, took a quick amount here. But for today, let's take a look at what happened here. So big bars. Again, lots of volatility. And so what's the play in here? Well, my play here was a put. And so why? Well, again, I'm expecting buying up to lunch, but I didn't have an opportunity to buy in here. If you take a look at the way the price worked in here, there was no buying opportunity like the others, right? I want to see some increasing in price. So what did I do here? Well, I took a put here and sold before the volume picked back up, sold it. Again, when the volume picks back up, it's going to start moving, and depending on which way it's moving, the velocity is going to pick up. And so easy time to sell when you start seeing the green bars come in. So this is a bit of madness. Again, travels all over the place, but really interesting. Another interesting one here is NRG. And so been swinging, as you've seen on a lot of my tickers, I've been swinging a lot of the energy sector because it's been volatile. It's usually not, but the volatility has been absolutely amazing. And today, there's really no way to really describe the rationale, I guess you could say, because there's not a rationale, but there is a strategy involved, again, based off of what I just told you about buying it open and selling at lunch. But there is so much to unpack in here. I just want to show you, again, address the volatility. So again, we have this huge price bar. So not only are we getting market volatility, we're getting local volatility here on the own ticker. So bought in about, only halfway through this. I did not even expect it to, this is a limit order. And so again, these are all limit orders. I'm not actively placing these trades or anything. These are all limit orders that I set up. And so what do? Well, I sell my my goal or my rule really is 2 red candles on whatever time frame I'm trading on. So usually I'm trading on the daily, but again, for these, I'm trading on the 15. I don't go down to 5-minute. I know a lot of people like 5-minute. I'll trade on the 15 because you got to really soften it out a little bit. And if you take a look at the price bars on here, I mean, it's just wacky. I mean, you need to have, some sort of control. And so on the 2 price bar I sold, okay, well, what happens? We got lunch. Okay, 2 o'clock. I know the volume's coming. I get another price bar. Okay, there's my buy. Well, here we are. And so opportunities are everywhere. Everything I just said is being done on every single one of these tickers. There's not a gamble here. This is an actual strategy. That's how it works. So hopefully you're starting to see that a little bit. Now the big winner for today is AUI. Now I still have contracts being held, but if we just take a look, just to go back over it, had this really nice diamond. So we bought in here on support, came up to the trend line, sold on the trend line, recuperated some more calls here, and picked up, more importantly, short-term calls on this because, again, we had earnings as well, and earnings are going to be, I mean, it's silly to say that, oh, it's earnings and it's, what if it's not good? What if it's bad? What if it trades different? Like Microsoft, amazing earnings, stock went down. It doesn't matter. And so I'm already expecting great price action. So picked up more calls here. And then today, again, this is 8.5%. And we're also recuperating the percentage from down here on that swing itself. So we got those swings on short-term contracts, and we also got scalps in here. So let's take a look at those. Again, the whole idea was buying at open. We're close enough to support down here. That's my rule. And so then what my idea already is to sell at lunch. But as you saw in chat, I'm selling at a trend line if I get resistance. And so this is a scalp. Now, why don't I hold through here? Because these are contracts that are literally expiring right now. And so this is going to kill it. And so what do? I sell it, take another one, and sell it again, because that's the best percentage play. And so even though this looks different than the other charts, I'm doing the exact same strategy on every single one. And so this again, this is the money earner here today. If you just take a look, this even here is 7.5. And so again, this is closed down here. And so the amount of money that you can make on these plays here, especially on lower expirations, if you know you're going to be selling it, is, again, that's where the profit came from. Next up, take a look at, from that same watch list, 717 CNX. So here we are, same story. So what's been going on? Well, we bought on support already, and we actually bought over support here, stopped on here, and bought again. So we had a swing to get rid of when we came up here to resistance already. So this is already one swing. But again, on the strategy that we did today, bought in, sold at lunch. Well, we got confirmation on another price bar down. And then we had another same story where we're here. And then what I'm going to look to do is sell at resistance on Monday, depending. So similar story, a little bit less action, but again, it's still there. Now let's take a look at a big blue. And so looks obviously more like the market itself, looks obviously more like the NASDAQ. What we're going to take a look at is what's going on with tech. So again, we got all this volatility going on with the selling, and this is a flag. So this was the flag that I charted, and I bought in over here. So if you remember, I bought in at lunch, I had to sell at resistance, and then here, well, I wanted to buy this. So what I did was average down today. And so what I am at break even on Microsoft. And in chat, I think it was Recovering Bear mentioned the double top, 100% a double top in here. Let me just show you here. This is 100% a double top. So absolutely right. And so, well, what's that going to mean? Well, double top's pretty bearish. Now, are we going to get lower than this though? Or are we going to just consolidate and trade sideways? Now, for us to go lower again, that's going to need to be equaled out. The only way this goes lower is if it's equaled out with the rest of the tickers in the market trading up while the tech is coming down, which it has been. So it's completely possible that it does. I'm more in the boat that this is going to trade sideways because, again, we're at all-time highs. I mean, take a look at where the June high is here for SPY. And then this is where we are, excuse me, again, so we really broke into all-time highs and started getting some crazy price action. This is bearish 100%, but is it going to be able to sell more? Are institutions not going to buy this up? That's more of the story. 100% technicals say bearish, and it does that on a lot of the tech, maybe less on, I would say Amazon doesn't look bearish. It's just kind of rolling over like the rest. But an interesting note here. And so, again, this was a flag that I saw. Again, we get stuck at resistance with everything. Interesting play again, mimicking exactly the open. Again, you sell at lunch, and you had another opportunity. So just pointing out the blues also follow the exact same thing. Next up, Wendy's. So made a ton of money on this when we get the breakout on the 21st. So we bought on the 22nd, right over here, sold at resistance. And now here's the next opportunity here. And so this is already set up nicely because, again, you've got resistance here to sell at anyway. And so whether it was lunch or not, you're going to sell at resistance. And so an easy play. Why am I not going to buy at open here? Take a look at this. Why am I not buying down here? Is it gonna go down? Well, the market's going up, so it's gonna continue going up to the resistance. Is there an opportunity to buy here? Yeah, you buy on support again. So I'm already set up long again. Just show you this opportunity again. This is what I'm looking at. I'm looking to get on top of this resistance, so we can now go ahead and turn this into support. That's what I'm looking for. I'm looking for this opportunity here. So just set an alert, but that's what we're looking for. So 2 plays in 1. And lastly, we're just going to go over the trap play I set up. Again, this is the second time I've done this play. So low volume, not my usual play, but I'm trapping some beginners. And so I'm going to explain what I mean by that. So what I'm doing here is, since the contracts are low volume, there's a healthy amount of shares being traded, but the contracts are low volume because there's not many, professionals trading the contracts. And so again, what's my strategy? I'm buying it open. So this is already some big price action. But the best part about this is that I already have calls from over here. So I had already loaded up on calls from yesterday. Now, price came down, that doesn't matter. My whole strategy is a trapping play. And so what that means is that I hold the calls. And so in this time, people, there's some people that want to buy the calls, but there's not many people that hold them. And me being one of the only people that actually hold the calls and can sell them, I can manipulate the price. And so what's happening in here is that I'm selling these calls for way more than they're worth. And so when you trap, you have to be coordinated across, it's not just one contract. You got to be coordinated across the different contracts. And the best part is that I already know what's going to happen. And so I'm already set up from yesterday, whether this was going to happen today or not. I was already set up yesterday for the trap so that I could be just, making up the prices. It doesn't even matter what the math is. If the stock was going up, which I thought it would come right off the support, which it looks like it's going to do now, but this was even better. This was even better. And the whole play that I just told you about is what I did here, but it's leveraged even more because I'm in control of price. And so if you just take a look at this percentage here, let's take a look. That's 5. We got even more. That's almost 6 there. Now, what happens when price is going up like that? Well, people are buying and the bids are all over the place and I'm the only one asking. And so that's a really fun one. When you get into more options theory, you start learning some tricks, especially with taking advantage of volume. Volume doesn't need to always be great. Sometimes you could take advantage of it and make some money off it. Even if, look, not the biggest candle, but there was so much going on in here. And so that's going to wrap this part up. I took quite a while again to go over it. This is going to be a quick recap, but it was pretty fun. I mean, this was a really fun day. I mean, there was so much to do. It's not just that I did well. It's more that it's important to realize that it's not gambling. There's not guesswork. There's not I hope. There's none of that. There's a plan that you can set up and set some goals of how you're going to do that and execute it and do it across the board. Don't just, I showed you all these tickers because I just want to show you that it's possible to do this on a lot of different things and to make money. And so you just got to have the confidence. I mean, the knowledge has got to be there, of course, but you got to just be confident in what you're doing. And so a lot of fun. Hope you guys enjoyed the IRL video there. We'll see how that goes. And now it's the weekend. Happy weekend, everybody. Let's have some fun. I'm out of here. I'm going to go enjoy myself a bit. So I'll talk to you later, and I'll see you guys in chat.